day, all. Ira Epstein of Linn Associates with your financial market wrap-up for a crazy, wild, and I mean wild, Thursday, the 1st of August, 2019 at 4:20 p.m. Central Daylight Time. Did a lot of TV, a lot of interviews today, and that's because the market was up about 300 points in the Dow and related amounts in other indices until the president decided to issue a tweet, and it was after 1 p.m. that he did it, where he said he's putting an additional 10% tariff on the remaining goods that the U.S. imports from China that aren't already tariffed. This does not impact the 25% tariff goods. That leaves him room to go to 25% on these goods. He said he would do that, the 10% tariff effective September 1st. Well, if you think yesterday's end, when they came out and they were both sides are saying they had constructive meetings and you bought into that, as I wrote in my update last night, if you think constructive means that they did anything, no. The word constructive simply meant that the two sides met. While they've agreed to meet in September, maybe. Now that the president has put the other 10% on and accused China of living up to nothing that they would say they're doing, they have phase two. Remember, you can't just read the American press. They have their own version of what's going on. The impact? You took down energies 8% or so today, a monster decline. Remember, China imports a lot of energy for its manufacturing and other goods that it does. Well, that comes under attack with the 10% tariff because there'll be another slowdown as to what we get. Think of all the companies now that they were hoping that these tariffs would come to an end. They got to consider what do they do for supply sources. You're down even in the nat gases. It's been up on a heat signal more than a demand signal. If you looked at the build that we saw today in the billion cubic feet that came in. Grains, they pulled the rug out from under it. Hogs pulled the rug out from under it. Anything you thought was going to be in a possible trade, maybe they'll just do selective trade between agriculture and this. Well, I'm not saying it can't happen. I am saying this is a pretty big slap in the face, and it's going to be very hard to put anything immediately back at work. While the metal markets look down, gold market was at the last trades of the day much closer to the high of the day than where the current settlement is. But the currencies look about where they were, and certainly we're accurate on what the quotes are in the stock indices. So in looking at the stock indices, I mean, you can argue that we're in a down thrust now. We've had a higher high, a lower low. We might be correcting back to that 18-day moving average of closes. And not day, week moving average of closes. This is a weekly chart of just closing prices. When you go to the daily bar chart, you can see how the market's been in a corrective mode. You've got a pattern of lower highs, lower lows. Where I went to school, that's the definition of a downtrend. The market has been, forget today's action, the market cracked under yesterday, the 18-day average of closes, putting the swing line down, the bias down, and today was a follow-through day. Early on, this market not only went to the 18-day average, it was powerful up until the president put out that tweet. In terms of Bollinger Bands, you held it and bounced sharply higher in the morning session. You had two sessions today. You had the session before the presidential tweet, if you think about it, and one afterwards, and you came down. If the market wants to correct further, why not the 100-day moving average of closes at 29.05 from where you're at? It's not far away. It's 46 points. When you take a look at what momentum is doing, momentum turned down, and it's not yet an oversold condition. It can be there when the market reopens if it drops more. And the question is, will it stay out of the Bollinger Band or not? It did everything it could until the presidential tweet to stay up. Now, of course, you've given cover to the Fed chair because he said that one of the reasons he had cut interest rates was because of what? Trade issues. Well, you've got them. When you look at the NASDAQ, you came down to the Bollinger Band, you rallied up and through it, through yesterday's high, and then after the president's tweet, it went right back down and came back to the lower Bollinger Band. This was a heart-pounding day, any way you go about it. The Dow had fallen down to the lower Bollinger Band yesterday, went back to the 18-day average today, failed against that number and came right back down. Admittedly, it's oversold. It could extend to the 100-day average. If the market fell apart, you could be going back towards the 25,600 level. It's certainly a summer market of excitement. In the Russell, what looked good yesterday for the smaller cap companies, I kept saying the first challenge of the upper Bollinger Band, or any Bollinger Band, is often where pros take some money off the table. The market had pulled back. Now, if it goes down to the lower Bollinger Band, I know you're going to be tired of me saying that. That's what I'm going to think on that downside. Momentum down, no trend. Higher high, lower low, staying range bound in the Bollinger Bands. In the VIX, I thought the pros were going to sell short today at the upper Bollinger Band. They may have. They certainly got stepped on by the end of the day. And as I've always said, there's more risk when you sell a call than selling a put that is down in the 11 area. Most it can go to zero. This can go anywhere, but I'm not thinking that. I'm thinking that it caught the market off guard. It's a 48-hour event, and the market will start rethinking all this. In the bond market, whole different world, a breakout to the upside. Now this market and the cash had been hanging around 2.06 forever. I was down with Rick Santelli today on the floor, and he and I had a talk about this, and we were saying we both have been thinking that this is going to break out to the upside, and it has. And we both think you're going to end up in the 1 3/4 area in bonds. Doesn't mean either of us are right. We were just talking about it because it gives the Fed more cover. And now you've weakened another level. And as a chartist, you've got a base under you. You've got to prove that the market can't do that. Remember what I said, as you narrow it in like this, eventually it's going to break out one way. Catching it is the hardest thing. You can see yesterday you went to the upper Bollinger Band. Today you tried to break back, couldn't do it, and that news just kicked the market up and away. Same thing could be said of the notes. If we go back to yesterday, just chopping, how many days at this 18-day average in the sideways action? We now have an answer. The market is broken out to the upside. The onus is on, if you're bearish, to prove wrong and get under these most recent lows. Best to you. TLT. Broke out to the upside, broke out of through here. Now, they're all over the upper Bollinger Band, and you only stay over that 5% of the time. So the question is, in an overbought market, over it in here, and I'll come back to there, and they're all got the same pattern. Will they hold or pull back a little bit? Pulling back is a lot different than throwing away the breakout. In the dollar index, the upper Bollinger Band has done what it's been doing all this way through. You get to it, you come back, you get to it, you come back, and you still have an embedded reading. Lose that, and it might be a sign that the market's ready to roll and get a bit of a correction in it. In the eurocurrency, you got under the lower Bollinger Band yesterday. Today you spent time under it, and by day's end, you had finished lower, but if you take a look, you're well off the lower Bollinger Band, which is 111.08, you finished at 111.23. So you're back within the bands. Is the market embedded? Well, both numbers were under 20 today. Both were under 20 yesterday, not the day before. So the answer is no. British pound, still very much in a downtrend, trying to have an embedded reading. Today, the Bank of England came out, and while it said it would like to raise interest rates down the road, and they were clear about that, Brexit on the table, they don't know which way it's going. They're holding their policy steady. Also, I don't know the final outcome as to Wales, as to what happened, but it certainly looked like Boris Johnson's party, the Tories, had held on to the power, which was a disappointment for Labour, and that keeps the pressure on this market because it has a little bit of control in Parliament where it was. In terms of the yen, remember what we talk about with this currency is this is a safe haven currency. And the market, the idea was, could it get down to the lower Bollinger Band and the 100-day average, and somewhere in there I'd be looking to see if the pros are covering their shorts, be the first attack. Market got down there early in the morning, rallied all the way up. Tell me the number it stopped at. If you don't agree that's about the upper Bollinger Band, I don't know what is, and it just came to a halt. So at one time, 120 points, this is a monster move off of President Trump. You had the safe havens move out to the upside. Bitcoin, the same thing. We had talked yesterday, it looked like this market, because it had lost its embedded reading, could have gone to the upper Bollinger Band. It did so. I'm not going to go back to the charts. I will tell you on the energies, down rather hard, but I'll cover that tomorrow morning for those of you that are my subscribers. I review 40 charts in the morning. I do this, I begin recording at about 6 a.m. Central Daylight Time. Tomorrow will be gobful of information. And the idea there is I can say a lot more in my morning video because it's a subscriber video. As a subscriber paid for video, it's not available to the general public. That means I can say buy here, sell there, do this. This is what I think going on. Very specific for you. Anybody that's a current subscriber knows that. It is not geared for the long-term trader. It's all about futures, which are shorter-term trading. If you haven't seen it and you want to, I make it so affordable. $7.95 for 30 days. That's your commitment. If you want to continue after that, the next 30 days stay at $15, or you can convert over for $13 every 30 days, and you buy a year up front, $156. If you just look at it once in a while, I think you'll find it worth its value. How do you find out more? Because I fully explain it, www.iraepstein.com, or go to our website, and on the or rather call my staff, they'll explain it. But on the website, go to Morning Research, go to Morning, and you'll see that. Go to Education, Morning Subscriber Video, and that's really what it is. You'll get it. My brain tired. Too many interviews today. You can also click right here. It'll take you where you have to go. Sorry that I had the timing wrong, but I don't want to feel like redoing it. I'm exhausted today. You have a good day.